Welcome to my daily market breakdown, Monday, July 21st. Today was what many call a newsless Monday, but I was confidently bullish in my expectations from the start of the day. As an ICT trader, I don't just rely on news headlines. I focus on macro conditions and the algorithmic nature of price delivery. Now let's talk about why I leaned bullish. We're currently in a season of tech optimism with investor sentiment still strong due to AI-related growth earnings anticipation and interest rate speculation surrounding future Fed decisions. These create a favorable backdrop for bullish continuation, even on a day with no major news. But as ICT students, we know this. Even if the market intends to go higher, it must leave algorithmic footprints. So my job as an ICT trader is to track those footprints and align my setups with precision. Higher time frame bias. On the daily time frame, my bias was clearly bullish. Why? There was a visible fair value gap that I expected price to come down and rebalance before expanding higher. Moving to the 4-hour chart, I immediately spotted an inversion fair value gap, IFVG, formed from Friday's close, and that gap was rebalanced during Sunday's price action. I marked it out clearly along with Friday's high, which stood as the buy-side liquidity target. Waiting for the entry multi-timeframe precision on the 1-hour chart, I saw a minor sell-side liquidity pool, the retracement from Sunday. The candle bodies lined up perfectly with the consequent encroachment of the IFVG. This gave me even more reason to watch that level closely. Then I dropped to the 15-minute chart, waiting patiently for New York session confirmations, the setup and execution. Just as I expected, the market came down and cleared that minor sell-side liquidity. Immediately after that, price created a fresh inversion fair value gap. I placed my OTE Fibonacci from the low of the day to the high of the London session. At exactly 9:30 a.m. New York Open, I placed my buy order inside the IFVG. No limit orders. Stop loss just below the IFVG. Take profit at the 100% OTE level. And what happened, price respected the entry perfectly, never retraced, and ran straight into my TP. This trade didn't happen by luck. It came from deep understanding, patience, and trust in the algorithm. Everything lined up: time of day, liquidity, engineering, displacement, imbalance, and the entry model. Each element was aligned with ICT principles, and that's what made the trade high probability. If you found this breakdown helpful, let me know in the comments. What's your biggest struggle as an ICT student? And don't forget to like, subscribe, and turn on notifications so you don't miss tomorrow's breakdown. The journey of mastering these trading principles is much like watching the sun set. It requires patience and understanding that every moment counts. As you develop your skills, remember to document your insight. As you sit at your trading desk surrounded by the ever-changing market data, the moment of decision draws near. Every indicator, every principle you've learned is now a part of your strategy, ready to guide you through the complexities of trading. Trust in your preparation and commitment. Each trade is an opportunity. That wraps up today's market breakdown for Monday, July 21st. Remember, as ICT students, our edge comes from reading the algorithmic footprints left in price, not chasing trades or relying on noise. If this breakdown brought you value, don't forget to drop a like, leave a comment, and subscribe for more structured and experience-based market insights. I'll be back tomorrow with another breakdown. Until then, stay patient, stay disciplined, and respect the algorithm. Peace.